Hello everyone, this is going to be the second video in the long-term investing series. The goal of this series is to have you as a new investor comfortable with setting up your long-term account. Although we do also focus on swing trading and day trading and trying to actually make income in the stock market, it is also important, in my opinion, for everyone to have a long-term account and to be thinking about the future. So in this video, we are going to cover some more important topics. If you have not seen the first video, you should see that video. Just click in my channel and you'll see that it's the second video that I've made. In this video, we are going to talk about what is an ETF, so an exchange traded fund. What are blue chip stocks? Can I invest in real estate? And what structure, as a young person, do I suggest that your long-term account model? So for example, I'm going to talk about the percentages I think you should put into different sectors and how to make your account balanced, so if the stock market heads down, your account does better than someone who was not prepared for that situation. Alright, so for the first question, what is an ETF? Think of an ETF as a basket. So a company will get together, or a group of people will get together and decide to, put their ETF on the stock market. Obviously, it's not that easy, but we're making it seem like it's easy for now. And that ETF is usually, has a theme. So, for example, there is this Genomic Revolution ETF. So the ARK fund, ARK Invest, has a couple ETFs like the ARK Genomic Revolution and ARK Autonomous Technology. What these ETFs are they include certain stocks related to the theme of the ETF. So for a Genomic Revolution, this ETF focuses on stocks in the field of genomics. So think gene editing and other things like that. I personally think that this is going to be the future of medicine. So I have put a good portion of my money into this stock. Not this stock, into this ETF. However, I'm not saying that you should do that. However, that is an example of an ETF. Another example of a more traditional ETF is the S&P 500. This is an ETF, so an exchange-traded fund that tracks the top 500 stocks by market cap. So there are 500 stocks in this ETF, so that means by having $40 in this ETF, I believe, I have no idea what the math is, but this money is split up individually between those 500 stocks, technically. So what that does is that actually diversifies my account, because if I include some ETFs in there, then I am very diversified. Instead of just picking one stock, I can pick a stock in the field. So for example, my green energy ETFs that I own, I like these ETFs because I can't pick every green energy stock. However, I know that the sector of green energy is going to do really well in the future, so I don't think I need to have the pressure of picking the correct plays. I just need to make sure that I have some good ETFs in my account. ETFs can give dividends, usually not a lot. Dividends usually depend on how much which stocks in the ETF give dividends. So if that ETF has Walmart, then that ETF will give dividends. And it will all be weighed accordingly based on, how much of that stock is weighted in the ETF. So if the ETF is 10% Walmart, then it's going to offer a higher dividend than if the ETF was 1% Walmart and didn't include any other dividend stocks. So just consider that. ETFs do have a management fee. However, on an app like Robinhood, or unless you have, millions of dollars or hundreds of thousands of dollars, you usually don't have to worry about the management fee, because that fee is small. You shouldn't end up paying more than $1 in total if your account is under a couple $1,000s. The second thing on the list is, what are blue chip stocks? It's a very easy term to understand. Blue chip stocks are stocks that have a good reputation and have been around for a while and have given shareholders a lot of value. So they've really proven themselves in the market. For example, think Google. believe it or not, I think Altria is a good stock. You know, they've been in the tobacco company for a while, so I think they're a blue chip stock in that field. Microsoft, they're definitely a good blue chip technology stock. Amazon, Apple, I could use some more blue chip stocks here. However, my personal long-term investing account is very growth oriented because I'm pretty aggressive with my money. That's not for everyone, but so don't necessarily use my account as a model for what your account should look like, because what I suggest that an account should look like is actually not what my account looks like, because I like to take on a little more risk. You only live once, Anyway, those are what blue chip stocks are. Can I invest in real estate? The answer is yes, you can actually invest in real estate through the stock market. And that is by a REIT. A REIT is a real estate investment. I forgot the term. Actually, let's look up what a REIT means. Real estate investment trust. Sorry, that should have been super obvious. Real estate investment trust. So what that is imagine a group of people get together, pull a lot of money in, and buy some properties and rent those properties out. They're generating income by investing in that REIT. That income generating REIT is required to offer some of that income as dividends to their shareholders. So those can be really good for your account. So you can get some dividends coming in through that. So for example, Prudential Financial has a 5% dividend yield, and it's a REIT. I really like this because it gives me exposure to the real estate sector. Even though I'm exposed to the real estate sector through Opendoor, I still like to have real estate because real estate, if you think about it, there's always going to be land, so you don't really have to worry about that land going anywhere. So that land's always going to have value, and the properties on that land should increase in value over the long term. Not an incredible amount of my portfolio are in REITs. However, I think about like 5%. Actually, when you include innovative industrial properties, I believe I have over like 15% of my portfolio in REITs. So I think that's actually a good amount. These REITs are what are generating most of my dividends. I don't have a very high dividend yield on this account, but these REITs are giving me dividends. And okay, yeah, so let's get straight into what structure I think you should have as a young person investing. I think that you should have 50% of your long-term portfolio be growth stocks, 25% be more safe picks, so I think blue chip stocks, and I think the other 25% should be ETFs, and also in the safer picks, I think REITs. Usually a good established REIT is a safer pick, and the other 25% is an ETF. The 25% of your portfolio that is ETFs allow for your portfolio to be a lot more diverse than if you just pick a couple select stocks. So I think it is important to have ETFs in your portfolio. It's more of a passive thing. You don't really have to worry about that. In most cases, they go up. If you're not really sure on what ETF to pick, first off, a good starter is the S&P 500 because it tracks the top 500 stocks. As far as safer picks, Walmart, established REITs like Prudential Financial, I think Microsoft, Apple, stocks that have been here for a while. I think Altria Group is good because they offer actually a monster dividend. Even though they're in the tobacco industry, and I don't really like the tobacco industry, I do like their dividend yield, and I do like that Altria. If you actually look at a graph of the stock, this isn't a graph of the stock, this is just a graph of the amount of money I have in Altria. But if you look at a graph of the stock, I believe they're actually at a good buying point right now, and Altria is a really stable stock. Unless Altria tanks a lot in the next couple of years, the dividends should make up for any losses. So that's just, you should just have some boring stocks in your long-term account. They provide a little safety. As far as the growth picks, the 50% that I think, for example, I like Jumia Technologies. It's like the e-commerce in Africa. I think Africa is a developing market, However, I think they will establish themselves, and hey, within 10, 20 years, e-commerce is going to be really, really strong in Africa. They have a very large population in Africa, so I say there's going to be big demand. And if you look at Jumia, you can see that stock-wise, other plays just like Jumia, or would have been Jumia 10, 20 years ago, like Amazon, or maybe Alibaba, or Mercado Libre, which is a what's the word? I'm forgetting the word. E-commerce, which is an e-commerce play in Latin America. They were all cheaper, like $50, $60, and then 5, 10 years later, they're trading upwards in the thousands. Not quite Alibaba's case, but for Mercado Libre, for Amazon, I feel like Africa, it's obvious. It's a really obvious one. It's risky, so I'm not trying swing trading this stock or anything. I just have it in my long-term portfolio. I'm trying to dollar cost average, which we talked about in the last video. I'm trying to dollar cost average Jumia and get it in, an average price, instead of buying really high and then watching Jumia tank for a few days, which I've seen it do, and then being concerned about that. I just buy a little bit of it every day. One of my other growth stocks is Opendoor Technologies. I really like this growth stock because only 1% of the housing market is online. I think Opendoor Technologies is better than Zillow and Redfin. However, that's just my personal opinion. If you wanted to diversify more, you could have, instead, 3% Opendoor, 2% Zillow, 1% Redfin. You can always do that. However, I've just went really crazy and thrown 6% of it into Opendoor. I think worst case scenario, this stock can only go up, because I think that as things become more streamlined and faster, people are just going to want to buy a home online. And if only 1% of that is already done online, we can easily get 5% or 10% done online within 10 years from now. And even if Opendoor doesn't perform that well, the sector, overall is going to perform really well. So, those are just things to look at when you pick stocks. So, like I said, with ETFs, I actually think the ARK Genomic Revolution ETFs are a little bit more riskier, because they track more growth-oriented companies. Some of them that will fail, but some of them that will be incredible. Cathie Wood was very renowned for predicting that Tesla would reach $2,000. Before stock splits, Tesla would be over $2,000 right now. She was right, and she was predicting that when Tesla was only $100 or less. So, her fund's done really good. She's made some really good picks. There's some other growth stocks I have. I'm not going to go over all of them, but I think if you're going to make an account, a long-term account, you should try to make the stocks work together and really put some thought into what you're buying and really do your research. However, at least diversify. Include some exchange-traded funds in there. Include some REITs in there, include some really established companies, and of course, include some companies that you personally think will do really well. Alright, that's all for this video. There will be a video coming soon that I will be working hard on. It is going to be a step-by-step video on how I found the stocks that allowed me to turn $4,000 into $20,000. My goal is to have that out by March 1st. However, bear with me if that's not out by March 1st. I want that video to be a really good video, and I don't want to say as much in that video either. I'm working on that. For those of you who have reached this third video, thank you for watching. I really appreciate you guys. If you'd like the link to get $30 free from M1 Finance, click the link below. You just need to have $100 in that account for over a month, and they'll give you $30 for free. They'll give me $30 for free, and that's money that we can invest with. If you haven't seen my first video on this channel, I talk about how, a little money like $40 or $30 or $10 can add up over a while. So check out my last two videos if you haven't already, and I'm done for now.